A very happy day to all of you and welcome to my YouTube channel. I'm your learning partner Sushila Hariharan. Do you remember these chaps from the hit fictitious fund Axe Capital? Yes, my friends, they featured in the hit series Billions, which was telecast for the last 4 years across all OTT platforms. And do you recognize this name? Spartan Knives. Who are these characters? What did they do? Yes, they acted in the hit series Billions, which shows the functioning of a hedge fund and gave us an inside view of how rigorous and how brutal hedge funds could operate. Axe Capital was a hedge fund, and they had a huge fight, almost a legal case, with their prime broker, Spartan Knives, in one of the episodes. In this video, we're going to take a look at who is a prime broker and what are the kind of activities that they offer their clients who are largely institutional clients. Prime broker is a institutional broker. Prime brokers are institutional brokers, which means they deal only with large value transactions, large value clients, clients who are able to give them at least $500,000 worth of assets, if not more. Many of the investment banks like JP Morgan, Goldman Sachs, Credit Suisse, Deutsche Bank, etc., have prime brokerage services which they offer as part of their boutique investment banking services to many of the hedge funds and other institutional investors like mutual fund companies. What is the service coverage of prime brokers? So when you're working in a hedge fund, you typically will find the brokerage, the fees, the charges that have to be paid by the hedge fund to the prime brokers. So prime brokers are primarily investment banks who offer a specialized service called as prime brokerage. They deal only with large value trades of hedge funds. If you and I wanted to trade in the stock markets, we would typically use the services of the executing broker or the retail broker. But large value deals running into billions of dollars have to be handled in a most sensitive manner so that it doesn't cause any kind of damage to the market trade or to the price that is being offered to the hedge fund. These kind of specialized trading services are offered by prime brokers to their hedge funds. The second is securities lending. We'll be taking a look at what is securities lending in the upcoming slide. Prime brokers also give their hedge funds clients leverage, the ability to trade with you borrowed capital. So the kind of trades that take place by hedge funds run into billions of dollars and they want to have more. In fact, they always say, dil mange more. So leverage transactions, short selling, etc. are kind of specialized trades that only large institutional investors can gamble upon. And for this, they need both capital as well as securities. And who better than prime brokers to give them these facilities? As part of the overall prime brokerage services, prime brokers also give their investment banking clients as well as hedge fund clients custodian services, the ability to take care of their securities, reconciliations, updated records, etc. And cash management services. So it depends upon what kind of agreement that prime brokers enter into with hedge funds. So depending on those terms and clauses and agreements, the value of each of the trades or the value of the services, the range of services is decided upon. Custodian services, what do I mean by custodian services? Custodian services is that specialized activity in the financial markets landscape wherein custodians hold financial assets of the hedge fund. So remember, the hedge fund is the owner of the securities, but the holder is the prime broker, okay, or is the custodian. So the hedge fund owns the securities, but the custodian holds them, okay. So just like how we have bank accounts, our salary accounts, our savings accounts, etc. are with banks. Banks hold the money for us. We own the money. So the difference between ownership and possession results into an agent-principal relationship, because of which the bank can only do everything with respect to our money as we authorize them, right? Similarly, in custodian services, the prime broker or the custodian holds these securities in good faith and trust, which is owned by the hedge fund. The prime broker is responsible for receipt, delivery, recording, and safekeeping of these equity and bonds portfolio of their hedge fund client. So remember, because this is like a principal agent relationship between the custodian or prime broker and the hedge fund, the custodian can do nothing without the approval of the hedge fund. Every instruction that has to come from the hedge fund has to be in a swift format so that the custodian can then act on those messages and deliver accordingly. So the custodian or the prime broker is responsible for receipt, delivery, recording, and safekeeping of the financial assets that the hedge fund owns. The custodian is also responsible for processing dividend or interest income, which is due to the hedge fund portfolio, and it incorporates all of the corporate actions of the hedge fund portfolio. So anything that revolves around cash entitlements or corporate actions as well as other kind of securities transactions is the responsibility of the prime broker when they offer custodian services to the hedge fund. The next activity is securities lending for short selling. Hedge funds are large short sellers. Remember, they are institutional traders and therefore they are able to take very large value short selling positions in the market. So what do we mean by short selling? Short selling means you're selling something that you don't own. Now this can only happen in financial assets, right? In typically all other assets, you need to own an asset, only then you can sell it. But in financial assets, we can, large institutional traders, market makers, etc., can sell something that they don't own. Okay, this is called as short selling. But what could happen on the settlement date? The short seller may not have the securities to deliver, and therefore they need to get the securities, or else it could result into settlement failure. If it's an exchange traded product, it could result into severe penalties. The shares could be auctioned, etc. If it's a non-exchange traded product, then there would be stringent clauses which could even result into credit re-rating of the counterparty for default failure. Hedge funds borrow the securities from the prime broker. The prime broker has a large number of institutional clients, and each of these clients have billions of dollars worth of equities and bonds. So if one of them is short selling in the market, then it's possible that the prime broker will approach any other hedge fund client and ask them for the securities for a short period of time, typically T plus 4, T plus 5 kind of durations. Remember, this is securities lending. Okay, so hedge funds can borrow these securities from the prime brokers, deliver those securities as part of the settlement process. The prime brokers lend these securities to the hedge fund so that settlement goes through smoothly and there is no settlement failure, and therefore the hedge fund doesn't have to face any penalties because of short selling. When the prime broker lends securities, they earn interest. The interest is calculated related to the Fed funds rate. The hedge funds are also large operators in the leverage market. What do we mean by leverage? It means the hedge funds borrow capital and trade in the markets. So they have client capital as well. They have the institutional investors who have invested into the hedge fund, which they trade in the markets. But over and above that, the hedge funds are capable of borrowing capital from different prime brokers and trade in larger values into the market. Prime brokers have access to money markets. They also have access to other investment banks who provide money at call. And prime brokers then lend this money to hedge funds for trading. So again, these are short-term trades, like leverage trades are short-term trades because leverage can be a double-edged weapon. I have already uploaded a video on leverage trades, the link of which will be shared in the comment section below. Do take a look at that so that you understand what is the importance of leverage, whether it's a friend or whether it's a foe. So for this capital that is lent by the prime brokers to the hedge funds, the prime brokers earn interest. Okay, so we already looked at securities lending, and we looked at cash lending over here. Prime brokers versus executing brokers. So sometimes when you're processing the deal slips of the hedge fund trades, you'll find the term prime broker and you could find the term executing broker. It's very simple. Prime broker is like your general physician. Okay, They offer a wide variety of services because they are not specialists, but they have a generic idea about every aspect of the trades that could take place. Prime brokers offer a wide range of services to hedge funds, one of which is executing a trade. Whereas an executing trader is a specialist. They trade only in one basket of securities, and therefore you could compare it to a specialist doctor or a specialist physician whom you would visit if you knew specifically what was the problem. Before the hedge fund deals with the prime broker and the hedge fund have to sign what is called as a prime brokerage agreement. This is an agreement between the hedge fund and the prime broker, which details the scope of services that the prime broker would offer to the hedge fund as part of the bouquet of service offerings that they can give. The minimum capital criteria is $500,000 typically that prime brokers take if they have to take on an institutional clients or high net worth individuals. In many of the cases, it's officially $500,000, but unofficially it could be as high as $10 million. So this is the capital that the client or the hedge fund allows or gives to the prime broker. Okay, that means the value of all the equities and bonds which would be traded between the prime broker and the hedge fund would be typically at least $500,000. The prime brokerage agreement will list out what are the services that can be offered by the prime broker to the hedge fund and what are the fees that could be charged for these services. Remember, hedge funds have trillions of dollars of assets under management, and that could be a large amount of money that could go by way of fees and commissions to prime brokers. So therefore, a close tab is kept on the expenses of the hedge fund so that they don't end up paying more money to the prime brokers as would otherwise have happened. Thank you so much.